It's Monday, January 30. Welcome to Business Incorporated, coming to you live from Lagos, Nigeria. I'm Chimeze Obi Iwago. Coming up, Egypt plans to issue bonds in other international currencies after successfully selling $4 billion of Eurobonds last week. Nigeria's Debt Management Office appoints Stanbic IBTC and Goldman Sachs as financial advisors for its $300 million diaspora bond. Plus, Nigeria's Dangote considers further investments in the energy and agriculture sectors in Zambia. Let's get started, and we begin in Egypt, where the government plans to issue bonds in other international currencies after successfully selling $4 billion of Eurobonds last week. The finance minister told a news conference that potential issuing currencies included the Japanese yen and China's yuan, but it was too early to say when or how much Egypt might seek to borrow. Egypt sold $4 billion of Eurobonds in 3 tranches on Tuesday, raising twice as much as targeted and at lower yields than initially expected. The combined order books for the 5, 10 and 30-year bonds exceeded $13.5 billion, which bankers say should mean demand is there for further bond sales. Stanbic IBTC and Goldman Sachs have been appointed as federal financial advisors for the $300 million diaspora bond being promoted by the Nigerian government. The Director General of the Debt Management Office, Abraham Wankwo, told the House Committee on Diaspora that the bond will now be floated before the second half of the year, is against the initial March 2017 scheduled date. 2 local lenders, First Bank of Nigeria and United Bank for Africa, were also appointed as book runners for the transaction. Mr. Wankwo explained that the transaction parties were appointed through open competitive bidding as provided in the Public Procurement Act 2007. According to him, the proceeds of the issuance will be used to finance capital projects in priority sectors of the economy. And to the markets now, starting here in Africa. All the markets we are tracking on this program from this region were all in the red at intraday. The NSE All Share Index was down 0.14%. We see there South African market, as the Johannesburg Stock Exchange, was down 0.49%. Egyptian Stock Exchange was down 0.73%. Of course, Nairobi Stock Exchange was down 0.11%. That was on Friday. And markets in the Middle East were mostly mixed at intraday. However, major stock markets were weak in response to soft global equities and crude oil prices. Looking at those figures there, we could see Saudi Arabia, of course, which fell 0.1% after 20 minutes of trade, was trading down 0.09% at midday. Qatar Stock Exchange was also down at midday, 0.69%. However, Abu Dhabi and Dubai financial markets were looking up 0.09% and 0.34% in that order. In Europe, investors are focused on corporate earnings and digesting international concerns over U.S. President Donald Trump's introduction of a travel ban on refugees coming from 7 Muslim majority countries. Let's get a sense of how the markets there are digesting the backlash. Christoph Kober, DWTV Channels TV financial correspondent, joins me now from the Frankfurt Stock Exchange. Hello, Christoph. Good to have you. Now, this is the morning after a tumultuous Trump-induced travel ban. We saw protests over immigration curbs implemented by U.S. President Donald Trump. How are the markets shaping up this Monday?
They are trading lower, definitely trading lower. There has been widespread condemnation in the business world regarding this latest measure by Donald Trump. And if you ask analysts, well, they are worried. They say this latest move is a clear sign that Donald Trump wants to follow through on his protectionist agenda, which again would spell trouble for the world economy. Add to that the increase in civil civil unrest, and then you have reasons for concern. If we look at the markets here in Europe, the DAX is about 0.75% lower currently, and other European markets also under pressure here on Monday.
Now, part of the weekend fallout was, of course, Starbucks CEO announcing additional 10,000 more hiring overseas in defiance of President Trump's policy stance. Now, could this be a potential storm in Starbucks teacup? You know what I mean?
Well, it is certainly creating attention, and Starbucks is not the only one, the only company taking action. We have homestay network Airbnb saying it would give free accommodation to any refugee or anyone not allowed into the U.S. You have to bear in mind Airbnb has about 80% of its listings outside of the United States, and the company wants to utilize its disaster response program. In doing so, this program connects hosts that are willing to give free space to displaced people. So we have Airbnb coming up with this initiative, and we have other companies pledging support to employees and, of course, customers in those said countries, and also pledging money. We have the U.S. rideshare service Lyft that said it will donate about $1 million to a lawsuit that will battle the latest Trump measures.
Yeah, we also saw Google and, of course, some other tech giants kicking against Trump's policy. But let's get to automobile business now, looking at Volkswagen, which, of course, has reportedly overtaken Toyota as world's auto leader. How did VW achieve this despite the criticism the automaker is getting over its diesel deception scandal?
Well, the Dieselgate scandal is costing Volkswagen billions in dollars and damages and fines here. And people in Europe are actually cracking jokes that if you buy a VW car, you may actually get lied upon. Nevertheless, many customers, especially in China, apparently take a different view, because sales in China have helped VW to become the world's most selling car maker again. Out of the 10.3 million VW sold last year, about 4 million were actually sold in China. Nevertheless, investors seldomly look to the past, but rather to the future, and what they see is a pile of problems. Volkswagen's former CEO, Martin Winterkorn, is now being investigated for fraud in regards to the Dieselgate scandal, along with 36 other individuals. And just today, Volkswagen had to announce that it was recalling more than 500,000 cars by its subsidiary Audi in the United States due to several technical anomalies. So there's not a lot of sunshine for VW, despite this new record the company has claimed. VW shares here in Frankfurt are down about 2% at this hour.
Well, one would now wonder how VW got to that top. Well, we'll keep an eye on VW's stock and see how that moves. Thank you very much, Christoph. Now, in the U.S., the stock index futures pointed to a lower open today as traders eyed a batch of earnings and economic data. On the data front, Monday will see personal income and consumer spending data for December released at 8:30 a.m. Eastern Time, pending home sales for December and Dallas-Fed manufacturing for January are due to be released at 10 a.m. Eastern Time and 10:30 a.m. respectively. On the earnings front, Enterprise Products and Booz Allen Hamilton are scheduled to report before the bell. General Growth Properties, Leggett & Platt, Principal Financial, Reinsurance Group of America and UDR are all due to report after the market close. We'll see the stock futures index there. The Dow Industrial Jones is actually tilting downwards, going back to the 19,000 mark. S&P 500 looking down 0.26%, while the Nasdaq was also, is also looking down 0.34%. In Asia, shares were lower today as investors eye the international backlash against U.S. President Donald Trump's immigration policy, which has added pressure on the dollar. Japan's Nikkei 225 closed down 0.51% after data showed that December retail sales rose 0.6% from the previous year, weaker than expected 1.3% increase. In other Japan-related news, the Bank of Japan began its two-day monetary policy meeting and is expected to keep policy steady and assuage fears that it may taper off its massive stimulus program. The Australian ASX 200 closed down 0.92%, seeing broad-based losses across all sub-indexes except for its gold sub-index, which was up 1.2%. Markets in China, Singapore, Hong Kong, South Korea and Taiwan are shut for public holidays. Now back here in Nigeria, proceedings closed bullish in the Nigerian Treasury bills market last week, driven by an improvement in system liquidity. Average yield fell 41 basis points to 18.04%. Investors were equally upbeat in the bonds market, driven specifically by increased liquidity, which led to high demand for mid and long dated notes. Notably, all bonds at the mid and long ends of the curve recorded contraction, causing yields to fall by 30 basis points and 19 basis points each at both ends. Now let's see how the week has kicked off at the debt market with Ekele Onoha, fixed income dealer with Diamond Bank. Good afternoon, Ekele. Thank you very much for joining us.
Hi, good afternoon.
Now, what's happening to the yield this first trading day of the week? Is it bullish or bearish?
Okay, the market today actually is exhibiting a kind of mixed sentiment. At the short end, we've actually seen a bullish market, and of which what really caused this is the excess liquidity that is still very much in the system. Whereas on the long end, it's really been a completely different reaction. We've seen a lot of selling interest, more especially on the auction bonds. At present, the auction bond for 5 years opened at 16.34% and is currently trading at 16.55%. For the 10 years, it opened at 16.78 and is currently trading at 16.91.
Now, the CBN is scheduled to auction about 219 billion naira in treasury bill this week, and of course, 72.9 billion naira from maturing OMO bills expected to hit the system this week. What is your expectations in terms of liquidity?
Okay, in terms of liquidity, just as I said earlier, there's still a lot of liquidity in the system, and we're also expecting much more liquidity to come from the OMO and the NTB maturities. But if you look at it, the CBN will still roll over almost every other thing that is maturing for the NTB. As for the rate at the auction, we don't really see it going as far as from where it closed at the last auction.
All right, thank you very much for your time, Ekele Onoha. Our trade accord that will boost global exports by $1 trillion should come into force within 2 weeks as the rhetoric of U.S. President Donald Trump clouds the outlook for global trade. And that's according to the head of the World Trade Organization, Roberto Azevedo. He said the trade facilitation agreement will have a major impact on poorer countries because it standardizes and simplifies customs procedures, slashing the time, cost and complexity of taking goods over borders.
Since 1995, it's the largest, it's the first multilateral agreement that has been put in place, and it's also the one that will have the largest impact. There are estimates that once fully implemented, this could have an impact of around 2.7 percentage points on trade expansion throughout the world every year until, say, 2030, and half a percentage point of GDP growth around the world. So it's could have a very, very, very significant impact. If the agreement is fully implemented and implemented correctly, they will get it in a few days. So things are going to cross the border much more easily, much more transparently, and at lower cost.
When we return after the break, Nigeria's Dangote eyes more investment in Zambia. Do stay with us.